Okay, I just want to get your sense on tire companies. We've seen a lot of interest in them. There has been interest in terms of buying, and the market, prices have been going up, but suddenly we're seeing big turnover on the tire companies. What's the reason? I know that your big pick there is MRF, but if you could just tell us what's happening there.
Yeah, in fact, this is the third time we re-entered MRF. After it crashed from 46,000 to 36,000, we entered. We bought for our clients aggressively way down to 31. In fact, even 37, 38 also we bought. The main reason for such a rally is that the natural rubber price, which shot up to 144,000 rupees per ton from as low as 92,000 per ton last year. Now again crashed. As of Saturday, the natural rubber prices have fallen by 18,000 rupees per ton, which is hugely positive for tire companies. Along with that, again oil price after touching $52 came back to $45, $46. So both are positive. And second, recently the US government has imposed anti-dumping duty on import of tire from China. And the kind of reason they have given, they are similar to what the domestic tire manufacturers are alleging, making allegation against Chinese tire, which is growing at an exorbitant rate in India. So there is a and the government also started studying this issue. So there is a possibility of government of India imposing anti-dumping duty on Chinese tire. If that happens, then you will see one more fire in the tire stocks. But lastly, very interestingly, after the run-up also, stocks like MRF and all still trading at a little less than 10 PE. The tire leader with about 15,000 crore of turnover, you are still getting around 9.5 PE. So according to me, still it is attractive for long-term investors. In fact, we have given 65,000 rupee target in the next 2 to 3 years. Economics also invested in MRF recently.
All right, we have with us Mayuresh Joshi as well. Mayuresh, could you take us through your picks at the moment, because markets have just opened. Our viewers might still get a chance to get in.
So good morning. My own sense is that if you're looking at the economy driven and related sectors in a staggered manner over the next few weeks or months, private sector banks, select NBFCs, a few consumer durable stocks, gas distribution companies on declines. I think these are the spaces that we are probably liking at this point of time.
Do you have any specific picks there? Are you allowed, does your compliance allow you to specifically tell us any stocks that you think are worth buying?
I mean, that's not an issue, but again, largely I think the markets have moved up significantly. So I think with the liquidity driven move that we've seen, my own sense is that one should wait for decline. So larger private sector banks like HDFC Bank is something that we'll still continue to prefer from a long-term view. Even cyclical stocks, including the cement ones, if investors are holding on to those from lower levels. Our own sense is as utilization levels start improving and as realizations become stable, yes, you've got the CCI order that has probably come through. But our larger take is that as the housing activity picks up in a meaningful fashion, along with the infrastructure pickup that we've already witnessed, there will be pickup in the utilization rates and levels of these cement majors and the mid-cap pack as well. So largely cement as a cyclical story is something that we'll still continue to like. Select few power companies have done exceedingly well over the past few weeks, but our own sense is like companies like Power Grid, which have embarked upon a major capitalization capex program. I think that should provide the required impetus in terms of the return on equity that the company probably derives. So investors holding on to the stock should hold on. But largely I think one must invest in a staggered manner in all these stocks, because I think the valuations are a little bit too stretched at this point of time, and aggressively I think putting in money at one point of time doesn't make sense.
Okay, I'm just going to pull up Patel Engineering again, because we're just seeing that Patel Engineering on the 2nd had won an award of arbitration of 2,500 crore. Now, if you look at that, 2,500 crore award of arbitration, 5,000 crore is broadly Patel Engineering's net debt. And as you know, that the government's come in to boost the construction sector, and that's going to make a big difference, because 75% of any arbitration order that you win, you're going to get up front. So that is an important move for Patel Engineering. 20% move, upward move. 5,000 crore was the debt, 2,500 crore, more than that it's getting, and if that is taken into account, that's going to be a big move. Let's pull up SPML Infra as well, and SPML Infra, and after this SPL Infra, that one is also up. and they expect that their debt is also going to go down sharply, that around 500 crore in advances is what it's going to get, and that's about 75%, as I said, the outstanding amount. And they're getting about 250 crores. That's the arbitration award they expect. 75% of that is going to come. So two of these construction companies which are moving, HCC, we've been mentioning, let's pull up HCC again for you, and that's also moving today. It's down a little bit today, 2.2% down, but it opened up sharply, went up to about 37 rupees, and since then has dropped a little. All right, let me get in Mr. Malkan. Mr. Malkan, I just want your views on some of the in the construction space. Is there anything that is looking strong, especially because of the large up moves we saw ever since the cabinet decision came?
I would look at maybe DLF maybe have making a bottom around 145, 150 levels, and there if I see some couple of more days of consolidation, then I think it would be a good pick for another 10% up from here as a trading call. That is the one I am tracking right now.
Okay, DLF. All right, I'm going to ask you a few counters and get your view on them. M&M, what is your view? What is your technical call on M&M?
M&M is, of course, trading in a range since last couple of months actually, and around 1500 is an important resistance and 1400 is the support. So I would wait for a breakout on either side, preferably on the upside, since the whole of auto sector is doing good. So once it crosses that 1500 level on closing basis, then I would be interested to buy this stock.
Bank of Baroda.
Bank of Baroda, as of now, I would be avoiding PSU banks on the buy side, especially. I would look at private sector banks which are already on the move and going good. So I'll go with IndusInd Bank and Yes Bank for buys.
Imtiaz, do you track Dabur, Bank of Baroda, Sun Pharma, any of these?
Yes, I think so. Dabur has just given a today intraday breakout. So I think so this would be a very positive for the Dabur to see much more for the higher move. But as of now, what I can believe that one should be having a very staggered buying in Dabur, and if at all the stocks can be entered few quantity at this level, and maybe around somewhere around 290 to 290 would be the range. Overall, can keep a stop loss of 285 and can go for a buy on the higher side, expecting 310 or maybe higher to that. Another stocks, as you said, Sun Pharma. Actually, the stock has already given a breakout in last trading session.
Right.
And today we are seeing the follow-up of buying in that stocks. So I think so this will be definitely a very good momentum. As I said, that pharmaceutical entirely has given a very much turnaround. If you see Dr. Reddy's, Divi's Lab, Cipla, Sun Pharma, the most of this pharmaceutical are right now trying to get the more gems in the stocks. As what earlier we had seen that the most of the pharmaceutical was under the sold, but right now most of the pharmaceutical has come into the buy portfolio. So these things are going to give a better return in coming days.
So you expect, but your pick there is Cipla and not Sun Pharma, right?
I would definitely go for Sun Pharma also as of now, because
can you give us a specific target and a stop loss if you have it?
I would be keeping a stop loss of 765 and would be going for a buy on the Sun Pharma on a higher side. Maybe around 830, 840 would be the target. Can be expected in next 3 to 4 trading session.
Next 3 to 4 trading sessions, you expect it to go to 838 to 840, and 765 is the stop loss on Sun Pharma. All right, Mayuresh, you know, a lot of people were thinking that last Thursday and Friday there's going to be a bit of a pause, and there was, because people were waiting for the US jobs number. The jobs number which came in was quite significantly lower than what the US analysts had expected. They were expecting about, I think, 180,000, 85,000. It came at about 155,000. Does that mean that now most of Indian analysts, most Indian market watchers are going to price in a fact that a September US Fed rate hike is unlikely?
So largely, again, I think looking at the jobs data number and looking at the way the inflation target has been set at 2%, it seems improbable for the Fed to probably meet that. So yes, I think in all probabilities the rate hike can get postponed to a later date. But having said that, probably it also emanates a different viewpoint that if the jobs data start declining over the next few months as a trend, is the US economy on a decline. So largely again, I think it's very important to monitor how these data points will pan out. But largely with this job data, I think yes, the risk of the Fed hike in September probably is pushed back.
Right. Let's just pull up rupee for you, because I think rupee is at a new high. It's by new high, I mean it has been declining for some time, and we're seeing a significant movement. They almost 0.5% up, 66 rupees 50 paise. I think this should be a several month high that we're getting right now, a 4-month high as I can make out for the rupee, and that's partly because of that US jobs number, which is, as Mayuresh was mentioning, one should watch out that if the US essentially starts slowing down, what impact does that have? Choka, I know you don't really care that much about macro factors and you look at companies very from bottom up, but would you be worried about a US slowdown? I know it's a two-way street, right? On the one hand, as Mayuresh pointed out, that a rate increase doesn't take place, that means that fund flows will continue. On the other hand, a slowdown in the US is something to be worried about.
No, not certainly. I mean, only the saving grace in the entire world is the US economy. We all started with this stimulus because US economy was not doing well. Now this rate hike is a symbol of US economy strengthening, which is positive because rest of the world is not doing well. The entire euro is still struggling to post above 1% growth, and China has own overcapacity problem. So in the entire world, only two economies, US and India, they are not showing any signs of deflationary pressure. That gives me a lot of confidence. That's why I've been saying for the last several months that Indian equity market would create a lifetime record high before December 31st, 2016. I continue to maintain that view. Even if the rate hike happens, it could be marginal, maybe another 25 basis point. Still the interest rate differential would be significant between the US and India, and therefore the India's equity story would not get upset in the short to medium term.
As of now, it looks like the life high could probably come today. Forget about 31st December, because we are currently at the Nifty is, I think, at about 88.80, which is just about 40 odd points away from a life high, 88.79 on the Nifty. That's where we expected the opening to be. Gentlemen, let me quickly take your disclosures before we let you go. We've taken a lot of time. Let me start with Choka.
I have personally invested in Balmalari company. Economics has invested in MRF, among all the stocks I have discussed.
Okay. Imtiaz?
What were the stocks we had discussed? I personally don't have any positions, but same recommendation has been given to our set of clients.
All right. Mr. Malkan?
Same here. I don't have any positions in the stocks discussed today.
Okay. Imtiaz, we didn't discuss any specific, Mayuresh, we didn't discuss any specific stocks with you, but still if you have to make a standard disclosure, we've already taken something on screen.
No, I mean, again, no personal holding, but it is possible that we may be holding these stocks on behalf of our clients in our PMS schemes.
All right. Thank you, gentlemen, for joining us. We're going to take a short break. The Nifty, as I mentioned, is exactly where we had expected it to open, approximately at about, we expected the opening to be at 88.79. This is exactly where the Nifty was 2 minutes ago. Gone up further, 88.83. That's where we are seeing the Nifty trading at the moment. Could go all the way up to 89.12 and then watch out for the all-time high. Will that come today? On that note, let's take a quick break. We'll be back in a couple of minutes.